Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, January 22nd, 2019, and this is the Daily Report for Gold and Silver. With the exception of gold today, we do have the precious metals complex lower. Gold is trading higher though, currently up $2. We're looking at the February contract and is currently trading at $12.8460. And it's up about 1.5% on the day. Silver is down by about 0.25% or 4 cents at $15.36. Platinum also lower by about 1.25%, back below 800 at 792. And palladium is taking the deepest of selling pressure today, down about $30 at $1,305. Now, dollar itself, I will put in the unchanged column. It, in essence, is up 0.037 points, nominal change at 96.03. And in terms of equities, they're pretty much lower across the board by about 1% each. 24,404 on the Dow. That puts it down about 300 points on the day. The S&P, this is the E-mini, down 37 points at 26.34. And the composite is also trading lower today. Traders, the key, or the $64,000 question, as I like to put it, is whether or not recent weakness in gold pricing is indicating a very shallow correction, a one and done, so to speak, or whether it is the indication of a correction which has just gotten underway. Now, although I don't have a concrete answer to that, we are starting to see some signs which are going to give us some clues or indication to which side of the fence the answer to that question resides on. First of all, we're looking at a February contract. This February contract, we can clearly see absolute resistance currently at about 1,300. That continues to be a superlative and strong resistance level. We can also say that once we had a range developed, this is on January the 4th, back Friday a couple of weeks ago, in which we had a high above 1,300, 1,340 cents to be exact, and a low of 1278, we could draw a compression triangle by simply looking at the set of higher lows and lower highs. That came to an apex just the other day, and we had a pretty solid break to the downside, a long red candle. Today, although the market is trading higher on the day, what I find most interesting about action today is exactly where the low came in, because you can see we've got a hammer-like candle, and the reason I say like is the tail should be at least 3 times the length of the body, which I don't think we're going to get. We might get 1.5, so I'll say hammer-like. It is a candle nonetheless in which the low that came in at 76. We're looking at a support level that we've earmarked at 75.80. That is the 0.38% retracement, and at least for now, it does seem to be holding. Lastly, and I think the most important part of what we're looking at today is a golden cross, which we can identify in the contract that we are looking at, which is February. Let me go ahead and blow this up just quite a bit so you can see the 50-day, the short-term 50-day, now cross above the 200-day, the longest term. There's our 50, there's our 200, and we absolutely have a cross. Now, of course, that could turn around tomorrow, but nonetheless, for now, we have some signs that we could be looking at a shallow rather than a deep correction, and that is based upon the low that came in on the support level and the fact that when we look at our moving averages, without a question of a doubt, they have crossed. Now, of course, we would want to look at not the February, because I am looking to re-enter the market from the long side, but rather we would want to go out to the April. And this is how the April looks when we pull that up. First of all, the one thing that we can say when we look at the April contract is we do not have a golden cross yet. They are certainly converging, so to speak. We have the 200-day, though, still up on the top. In a out-and-out bullish market, you're going to have it set up in proper alignment, which would be the first level, or the highest level is, of course, going to be the 50-day. The second highest level is going to be the 100, and then below that is going to be the 200. So we have a somewhat of an inversion because we did get a cross in which the 50 crossed above the 200-day, and this is back in November of last year. But nonetheless, we are still a little ways away, about $7, $8 away from that. Nonetheless, when we look at the candle that we're seeing today, the one thing that we can say is that it is more hammer-like. So we've gotten that hammer candle. This is coming in at our defined potential support level, and that support level is 1281 upon a 0.23% Fibonacci retracement. And so the low that came in today was 82.10. We've got this at 81.30, so it is just above it. If in fact we can see a foundation and the market itself hold some ground right in this area, that's going to give us a good indication that this could in fact be a short retracement. If it is not, what we would see is a continued weakness in the market. We would see it break and close below 1281, and then the area we would look for next would be 1264, and that is based upon the 0.38% retracement. Now, we just got out of a couple of trades, one with real nice profits. The other one, we took a loss. The loss was about half the size of the profits. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.